I've been trading for the last 8 years. For the last 3 years have been full-time. I've secured 7 figures in funding, blown it, resecured it, and now I have almost 7 figures in payouts. In the next 10 minutes, I'm going to teach you a strategy that I've been using for the last 2 years. It works on every single asset class, it happens every single week, and you only need to know how to do 3 simple steps. So the only 3 steps you need to know how to use are 1, a liquidity sweep, 2, a break in market structure, and 3, a return to the origin. So let's break it down on this chart. If you look here, we're looking at an NQ chart on the 12-hour time frame. This will be your main time frame that you want to use to gear your buys. So I'm going to go ahead and I'm going to mark every single 12-hour sweep so you get a base idea of what I'm talking about. You can see here we have a 12-hour sweep, and what I mean by a 12-hour sweep is we come down below this low, we wick down, and we close above it. The body has to close above it for it to be a valid sweep. So you can see here we have a 12-hour sweep here. I'll mark a few more. We have another one right here. We have another one right here. And we have another one right here. As you can see, this happens again and again and again. And this is just on one asset class. You can use it on any different asset class. It works on crypto, it works on CFDs, it works on futures, and it works on Forex. So you can use it on all assets. Now, step number 2 is what you want to see is you want to go to the 1-hour time frame. The 2 time frames you're going to use are the 12-hour time frame and the 1-hour time frame. These are the only 2 time frames you need. This is based for people who have 9-to-5 jobs. This is exactly what it's designed for. Now, if you go to the 1-hour time frame, you can see here, to make it a valid setup, what you need to see is you need to see a break in market structure. And what I mean by a break in market structure is you need to see the last fractal high relative to the low. So here's the sweep right here. This is a 12-hour sweep. You need to see the fractal high, so the relative high relative to this low broken. So you can see here we break structure right here. We push up above, and this is your RTO. And what RTO stands for is return to origin. So you're just going to look for a return to the zone, the down candle that led to the up move. And you want to look for price to come back into that zone. And once it comes back into this zone, you're going to take the trade with a limit, and you're going to take 2R. Always going to take 2R. So you're going to put your entry right here, and you're going to put your stop below the low, and you're going to take 2R. And it's just going to be a static TP of 2R, and you're not going to change it. So as you can see, this trade took a little bit of time to play out, but it ended up working out perfectly. If you see right here, and it also ended up giving up another setup here, except there is no true, or no, there is a retest right here as well. So you have a setup right here for 2R, and you have another one right here, because on this setup you have a 12-hour sweep right here. What's the next step we need to see? We need to see a break in market structure. So you have your 12-hour sweep, you have your break in market structure right here. Go ahead and put your limit on the break right here. Break in market structure is right on over here, and then once again you're going to take 2R, and as you can see, trade ends up hitting take profit right here. So we're going to go over a few more examples, but like I said, there's just 3 simple, very easy steps. So if we go ahead and clean up this chart, we're going to go back and we're going to look at another 12-hour sweep, and we're going to look and see if we can find another setup. Now, it's important to note, not every single setup is going to win. It's perfectly normal to see losses in trading. And all you have to stick to is the risk to reward. If you stick to the 1 to 2 risk to reward and you only take these setups, you will be profitable. So you can see here we have another 12-hour sweep, right? Because price comes up, we sweep above this high, and then we break down and we close below. So this is a valid 12-hour sweep. There's also a sweep right here. So now if we go to the 1-hour time frame and break it down, see if we can see a setup. So here's the first 12-hour sweep. There is no break in structure. This 1-hour hourly candle does not break, it sweeps it. So we come up again and we sweep one more time. Now your break in structure is right here, right? We come up, we sweep this high, we break structure. So if we take a line here and we draw it and break structure right here, and then we take our risk to reward tool and we put our entry right here, stops above the high, and we target 2R, and you can see once again the trade perfectly hits take profit, and this is in a pretty quick amount of time. From the time we entered the trade, which was right here to right here, we're looking at 4 days. So yes, it's a little longer than most trades, but still, it's still an extremely profitable strategy. And once again, this is designed for people who work a 9-to-5 job, people who can't be on the charts all the time. You don't have time to look for in the London kill zone. You don't have time to look in the New York kill zone. This is designed for you. You come, put your limit, off you go. So if we go to the 12-hour time frame and we just mark out the 12-hour sweeps, you're going to see time and time again that the market continuously reacts every time there's a 12-hour sweep. You can see there's a 12-hour sweep here. Look what happens. We have a big push. There's a 12-hour sweep here. Closes a little bit below, so this one's not quite valid. We won't give that one. But if you see there's a 12-hour sweep here, you can see once again the market pushes away. If you see here, no, that's not one. You can see there's another one here. What do we have? We have a big push away. So every single time there's a 12-hour sweep in the market, the likelihood of there being some type of reaction is extremely high because it's a higher time frame. You're coming and pivoting below a major swing low or high, and you're pushing the other way. So you have the trap liquidity below the high or the low. The likelihood of it going the opposite direction is extremely high. Now, when you couple that with the hourly break in structure, the strike rate on this strategy is extremely high. I have been using this exact strategy for the last 2 years, and I use it on FX, I use it on crypto, I use it on indices, and I use it on futures. So once again, 3 simple steps. You need a sweep, market structure break, and an RTO, and that's it. 3 simple steps.